Okay, let's take a look at what we've got here. Let me bring my screens up to par, having loaded in here. And what we're seeing here is just happens to be a short of the ES, nothing special. We've got a little bit of a down target there, but this was just to kind of get a gauge, and what we were going to show with this was generally what we were seeing here is an overbought setup, and we went negative on the power momentum right about there, so we saw that we had the increase in the red line, and more likely than not, with the amount of bullishness that's out there, this is just a little bit of a mini drop. This happens to be a 1,000 tick chart, and so what we're going to do is going to go over some of the indicators and how we get there. Let me widen all these charts. A little bit bigger screen than before. There's Google 15 minute. We saw that nice signal there. And slide this across over here. Okay. What's interesting about this ES tick chart that I have on here is we had a member who, oh, and by the way, if anyone who happens to be watching could just type in that they can hear me so that I know, I will type that in as well. There we go. Can you hear me? And I actually want to put up a live page for myself just to make sure that I can see that the audio and video is going through. So let me take care of that real quick. And fantastic. Okie doke. Perfect. So what we were looking at is, oh my goodness, with the ads. There we go. So this ES setup here got a little bit overbought, but the important thing about this is a tick chart. So tick chart's a little bit different than what you might be used to from a normal time standpoint. And what the tick does for us is it eliminates time and only goes off of trades that are executed, so that you might want to refer to it as more of a pure understanding of what the market is doing at any given moment. And in this particular case, we took this higher up bar after positive extreme, and we began to roll over on the shakeout right here, and then the power momentum. Let me increase the size of that so you can see it. So all bullish within this overall move to the beginning here, but once you begin to make your lower one after having gotten past our warning line, I look for the change in the relationship between my power momentum right here, where I'm looking for the yellow to move back above. And this is mostly going to be significant to people who have the indicators, a little bit less so if you're not looking at them. But it's important too, because when you see this on the daily charts, knowing what you're looking at when you see this kind of relationship becomes important. So I went ahead and jumped on that real quick, just for a fast one. I mean, literally seconds before I loaded up this chart setup to go, and you can see how quickly these kind of setups can generate, pretty decent results, where most people would be just looking at, oh, everything was fine, and all of a sudden you have this dump, and people don't understand, well, why? Well, we could see that the players, based on that tick setup, were selling into the rise. Now, this correlates to what I was talking about the other day on our video report, where when we see MACD buyers getting their buy signal after you've had a huge move, that's usually an indication to sell into their liquidity. And this is exactly what we do. So let me just go ahead and get rid of this trade right here. We'll just put that right there. We slide it up, and we should be able to hear the order filled as it takes out, unless we get a bounce like that. We just have to wait for it for a second. We'll take a drink while that happens. Because usually what you do is you get a little bit of a flush, and I typically want to sell out of those flushes because they can reverse pretty quickly. Back to our chart now. See, look, this is why. Because you get that flush, everyone gets terrified, and then you end up getting your green dot signals. So, what do I care if I take one extra little one? We should be able to get filled here. There we go.
Order filled.
So just like that, and then makes it very easy when you're using TradeStation within this. And what I've done is I've set up the OS order where I can then down click, you can pick any selection, and then you can go into this little dotted line over here, and it lets you then pick the amount of offset you want to begin with. And you can create all sorts of machinations as far as what you want to do. Um, Up, down, sideways. I mean, it will, if you scroll down even further, you can flip to other orders that will allow you to fade and do a variety of different things. So, at first, when I looked at this from TradeStation Setup, it was pretty daunting because it was like, well, I'm used to level 2. And, and this is where I understand it's difficult for people to transition from what they're used to into something different. And, this is why I make the indicators available as for people to try out for a week or so to get used to them a little bit, to give yourself a feel for what's taking place here, and utilizing in some cases a very foreign platform. um, it's not common to most people. Now, should we just turn around and do a fade buy on this particular setup? um, we could have, but the more practical approach in this particular setup is to wait for the close and to see that your extreme moves higher. Because in this case, you're still seeing a complete drop off here, and you could move to a red trend very fast off this particular setup. What's positive about it, and this is where I then want to get into some of the detail, looking at my ratio histogram. When I've got my yellow moving down off these extremes, that's above, and in this case, when I say above, yes, you're looking at the yellow being below, but meaning that it's on top of this reading when we're moving to the downside. And likewise here you have the orange above the yellow when moving to the upside. Now if that were reversed and the yellow were up, I would expect a bit more of a decline than typically you're seeing right there. And here we have the orange, and you can see it's been a very positive trend all the way through. That orange has not dipped below the cyan until like way back here right after we got the short signal from the last setup. And this was a clear short signal from this red dot, because you'll notice the shakeout reading. Alright, we were way up here, and then boom, down here. Now you might be looking at this and seeing, what is that flat hawk he has there? Alright, well, this takes us to what I was talking about, the flexibility of some of the indicators and the strategies that go with them. So for those of you who maybe aren't familiar with TradeStation, I can just right click here and we can look at our strategies that are there. And currently I have on, let me move it over even a little further so you can get the full view of that. NBI Opus #1 Futures Strategy. In fact, I gotta widen that a little bit more so you can see it. And what's interesting about that is we can go to our format strategies, and we can see that I have a series of different ones on here, but there it is, Opus Strategies. It's on the on status, and on the other side here we would have our format. And what we would be able to do from the format standpoint is make adjustments accordingly. And so in this particular case, you can't trade this one because it's the ES. So when we're doing it, this is more of a historical back testing as opposed to, when you have your regular chart, you have to be in your ESH, the actual trade. But it's good to have an add ES situation because I can look at a lot more data going back than you can when you're looking at the actual current futures chart, because that's only going to show from when that futures contract began trading. And in this case, that just happened recently. December 21st is when, well, actually it was a little bit before that we moved over, like around the 14th, and switched over into the new session. But what's interesting about this one is that we can then run performance reports based on very specific scenarios, whether it's positive extremes that a higher close on a lower positive extreme. And I bring that one up because it's very relevant, because how many times have we just been talking about waiting for that lower extreme positive after a nice up run before we just immediately jump into a short setup, not to mention you want to be looking at your shakeout that you've peaked. So in this particular case, the system wanted to buy in that particular setup, and that's obviously didn't work out in that particular one. But going back to this within regular configurations, it's going to do a variety of different things over a lot of situations back and forth. And we can then go to our view up at our TradeStation. We look at strategy performance, and so then we can begin to gauge, how effective a strategy like this is. And in this particular case, we can take a look. I'm going to widen this up a little bit so we can get more of it. Okay, so that gives us a full view of this performance report on a 10,000 tick chart, and you can see that profit factor, pretty impressive from that standpoint. 3.6, 85% win rate, not horrible, not horrible at all. Quite a few trades now, because you're only talking about a narrow window here, going back to June of this year, well, of the previous year. So it's a 6 month, 23 days is what that standard period is. And I always love to look at my RINA index, because that is a, well, I can click it here. It usually gives you a little definition. I have to scroll down to get it. So right there. It's one that takes into risk reward, as well as how much adverse impact a strategy has. So it becomes very effective when we compare strategies to one another. And anytime you're, gosh, even over a couple hundred, you're doing pretty darn good. But when you're looking at over 1,000, that's a pretty darn impressive strategy right there. So, and then I always look at the performance graph, because you want to see, this gives you a clue as to how much equity drawdowns you get within a particular strategy. And what's unique about this setup is this isn't something I did. This was something that was done by a member who's had the indicators for some time, and has been utilizing the function of being able to go through and format these particular setups. And I hadn't done it for intraday. I had always left the MBI Opus for daily charts. So to utilize it on an intraday and come up with this kind of success is, I don't want to say surprising to me, because I had planned to customize for intraday a unique strategy platform. But knowing that the setups can work even within that kind of intraday as well as daily, it's nice to see. And in this particular case, you're getting much truer value from the trade when you're utilizing a tick chart. And you can't always do that, though, when you're looking at stocks, because the stocks are not going to give you the same liquidity, so you're going to have a hard time getting the, and what will happen is sometimes you'll go to a tick chart for a stock, and then the indicators will snap off. And so some of those you're going to have to test with regard to whether you can use ticks or not. And in some cases it will be incredibly slow, because there isn't enough volume taking place to, create bars on a tick. Because in some of those low liquidity stocks, you could go, 45 minutes, an hour, hour and a half before you even make one of these bars. So the signals become that much more significant when those do happen. So let's take a little bit more look at this relationship about this orange being over the yellow when we reach these off the highway points. And I talk about these off the highway points because this is where most people get stuck into, like your RSIs, your stochastics, all of them get overbought. And overbought in my concept is very different than other people's. This is where we utilize our extreme histogram moving into the positive, whether we've transitioned from a red trend to a green trend, and where our shakeout is in relation. If we've come from a very negative, and I kind of had prefaced, when we were talking about this, that we would talk about a danger zone with regard to the shakeout, and most people think that that's going to be up in this plus 25 range, and not so much there as I see the danger zone where you've been in a downtrend and are coming up, and you get to this point right in here where you're just about to break past the zero line from being extremely negative. And it becomes very pivotal, because this is usually the point at which you've been in an extreme sell-off, and you're either moving forward from that sell-off, or it's about to break into a nice move. And understanding the relationship between the overbought status that you can achieve in red trend after a quick move up, which is always significant, because this is sort of like what's happened right now in the market, where we've had this sudden huge move, and people automatically say, oh, because it moved so much Monday that they were already starting to short it as soon as Wednesday opened up, and then Wednesday has a massive day, and they're like, oh, well, now it has to go lower. And I'm like, no, it doesn't. It doesn't have to do it. We weren't seeing overbought in the market at all, even after these two massive moves. I mean, we started to see a little bit from a couple of futures that I pointed out at the close, but those were from minor down targets. And like I said, I figured they would be resolved overnight, and in fact, it was resolved overnight. And boom, we came back up to neutral to positive is about where we're at now, and that was because we don't ignore what we see from regular indicators, because MACD from a daily standpoint had just given a crossover to a buy. And so this is where you get a little bit more of a pop, but this is where the bigger guys will start selling into that MACD pop. And do I have a daily here? I think I only have the intraday charts. There was our VIX. And see, the VIX was another one that some people were surprised. Yeah, we played the dots off the VIX too. Works the same. Where the money goes is where the money goes. It doesn't make any difference if you're talking about an ETF, you're talking about an index fund, whether you're talking about a sector. I mean, I can sit here and put up sectors, and we can watch sector rotation all the time using the dots. Um, is it practical for me to be able to go through all that for you? No, not necessarily. And so I leave it to those who have the indicators, and which is the only reason I made them available, is because I wasn't going to take the time to do all that every single day for everyone. It just didn't interest me at all. Likewise, I rarely went through, and I still very sparingly go through stocks as it relates to our normal trade setup. So it gives you a little bit of a perspective as to why I've made the indicators available. And then when it came to the dots and the reluctance I saw from people to just want to switch the platform that they're so accustomed to, and that was the only reason I made the dots available for people to have, because I wasn't even sure that we were going to be able to do that. And while we can still do it from the trade station, I mean, it's limited capability. The next approach for me, obviously, is to work on programming language for additional platforms, and to see about putting them in the context of some of the more broad range. Don't know if that's going to be possible, but I may look into it at some point. I mean, from my standpoint, this was always about teaching people how to look at the market a little bit different, and giving them a unique perspective compared to what they're used to. Because for so long, it's always been about, oh, what's the support resistance line? Have you looked at the earnings? And it's like I posted today on StockTwits. I don't look at what a company does. I don't care. I mean, you give me a symbol, I look at the symbol, I can see on the stock what the fair value of the stock is based on what's happening at any given moment. Speaking of which, let's go ahead and take a look at our PCLN short setup that we had from back over here. And yeah, getting close. Getting close. I caught this pop, went up, took a little bit, then was right about here. I just had posted that it was an opportunity to go ahead and jump back in again, because we were going to see this lower histogram. And so people will look at some of my tweets and they'll be like, how did you know that? And it's one of those things where it's not like I knew it, it's just that this is what they were presenting to us. You had the exuberance going through, and when you start seeing fading on a rising shakeout like this, it's a clear indication that these guys are selling into every little pop, and it just begins to break down. And what I like to look for, and we were talking about this one, is, let's go back up here and look at our power momentum. We look for the yellow moving above here, and it just becomes very clear. I mean, you have the predominance of yellow above all of these. You had the one little pop when we got the orange dot, but immediately after that orange dot pop, I saw the yellow come back, so I knew, okay, that I'm not going to try and ride that orange dot pop all the way. Now, someone who's just getting the dot alert, they're going to get the orange dot, and unfortunately, I can't give them this information. There's just no way to do it after it's happened, but that's the reflection of the dynamic market. There are limitations as to what I can provide from there, which is why it's so important. And people always say, well, why do I need to, maintain a membership along with getting the indicators? Because it's an ongoing education in learning about these details and being able to spot them. I mean, for me, it becomes so second nature, I don't even really think about it. because I see it pop up and it's like, oh yeah, okay. And so someone will get all excited when it takes place, and I'm just sort of apathetic about it. It's like, yeah, okay, or they'll send a think good call. Well, to me, I didn't do anything. I mean, this is stuff that I've all had programmed. The algorithms are set. It's just either going to take place or it's not, and all we can do is trade the signals that come in place, and it's just the way you have to approach it. Now, I would look at this green dot buy setup right here, and you can see you're still in a negative bias on PCLN for that 15 minute. And that's not surprising because when we were looking at our 78-minute chart, okay, they started out with a perfect red dot short. I mean, it doesn't get any better than that kind of signal. Your next bar forms a lower positive extreme, and you notice the positive extreme is winding down. And what this positive extreme is calling for is a retest of the low. So at a minimum, I'm going to be targeting somewhere around that 647 area, okay, from this setup. And then I get people say, well, but you were just bullish on PCLA. Yeah, I was. I was bullish when everyone was bearish. Now everyone is super bullish, and it's like, well, but the signal's telling me to do something else now. And I get used to that. And so this is where, on Twitter there were some people saying, well, you should, you're owed some apology. I'm not owed anything from, making the call and people having a disagreeing view, because the reality is the technical analysis on PCLN from the daily standpoint, when it was starting to break down, it looks ugly. And there's no question about that. It looks horrible. But this is what these guys produce in order to fool you from the setups. And they do it every day. We were even talking about, what was it, X, and it made a nice move. Likewise with Caterpillar on the explosion, and some people were even talking about, wanting to short that immediately. And it's like, wait a minute, we just went from red trend. 5 days. It's 5 periods, not even days, because if this were Caterpillar on a 78-minute and we had just gone from red trend to green trend, you'd have to look for 5 periods before you just automatically assume that that's an overbought setup. And in this particular case, now it looks very attractive into the third day, and this is where I would begin to leg in at the close of the day here, where you've had a lower positive extreme, and now in your move 3 days, you know that you're still a little bit far out, but you begin to take it. And this is where legging into a position is always difficult for people. They just want to jump in full force, and that's not the best approach. Why? Well, look, we've got the shakeout still rising. Fine, that can turn around and come back down. No problem there. But also, I've got my power momentum that's still rising, and that's still an excellent relationship. Look at how much further over the yellow the cyan is. So it's going to be a day or two, and the reality is that's about 2 days away from flipping over. Should we get any weakness going forward, it will take 2 more days before you'll see that. Now, what is your expectation on this? Well, primarily because of the positive extreme, the expectation, while you have the magenta dot here, really is the low of this bar at the 92.95 level. Primarily. At that point on a retrace there, I would be looking at redoing it, and or at least checking what the indicators are reading at that point. And the reason being is I'm going to be able to get my discount, because I just not willy-nilly jumping into the setup just because it moved higher on the positive extreme. I still would want a discount from this setup. And the fact that I'm so close from red trend, you got to give it a little bit of that momentum creep before you just automatically go negative on something like that. And that's another thing. Some people say, well, you just short because it's overbought, and that's a way to lose a lot of money, because there's got to be an impetus behind it. And in this particular case, fine, we're over the warning line, we're at new highs, but I'm going to be waiting for that decline, or the close right here. I will begin a leg in for CAT, because you finally have your lower positive extreme, and that becomes an effective approach on there. So it's something to be watching for, particularly when you're building a nice solid histogram like this on a power momentum. And we haven't even put in here, and let's go ahead and do it now. Let's just assume that we didn't have it, and we could go here to our format analysis techniques. In this particular case, I happen to have it in here. I'm looking for my up-down power. Am I not seeing it? No, we don't have it in here. Alright, well, that's a perfect one. So we right-click our chart, insert analysis technique, And here we go to all my analysis techniques. And so up-down power continuous is what I want. And if I lift this back up, you'll get an OK button down here. You just click OK, and it takes us to our input section. All right, well, you'll notice that from up-down power, we always have histograms. So if we go to Style, we click Histogram, and histogram for both. But now I like to have them a little bit darker. So for the bull setup, I want to go in the mid-range, and then for the bear, I like it really thick. So the bear is going to be the red side, and the bull is going to be in the whitish gray color. Now, I don't want it with my price, so I'm going to pick no axis, and I'm going to pick a subgraph. I always put it at the bottom, so I pick 16. And then we just go down and click OK. And there it is. Now, oh, there's a problem. My bear power did not come out as a histogram. So I can just right-click it, and click Format again. I go back to my Style, and see what happened. Oh yeah, it says line. So I have to click Histogram. And it's easy to change that way, and that'll happen a lot. And voila, now that looks a lot more consistent to what you're used to seeing from an up-down power standpoint. So I would then right-click here, and that will put the values on the side. And you can do that for anyone. If you ever wanted to lose them, you can just click and uncheck it, and the price goes away. Very simple to do. Or, likewise, if I'm up here and I have price, but I really want to just see my extreme histogram, I can right-click here and scroll down and click Extreme Histogram. And so now all of a sudden all you see are the extreme histogram values instead of price. There are a lot of different things you can do. Okay, so now we have the up-down power. So what do we do with this? Well, what I always talk about looking for is the relationship between the two. And let me grab my little calculator here because it's the easiest way to do it, and we'll do it together. Alright, so on a daily standpoint, when this one came in, the readings, and let's go ahead and just disable a bunch of these, and we can get a much bigger view of our up-down power. There we go. Alright, so when I put it on here, you can see the reading was for the red and then for the white. And so what I usually do is I'll take 336 and divide it by the 525. And that's going to give me a 0.64. Now, what does that mean? Well, typically what we know to be true is that when you reach a relationship on your up-down power greater than 0.7 or 70%, that's when you've reached a point of near extreme overbought. Alright, didn't quite get there. Now, look at this relationship now. You've dropped down to about a 50% short relationship in this particular move. This just tells us that shorts have covered in this setup a little bit. So we're likely to see probably that 2 more days of at least trading across or beginning to fall at that point, which is why I would begin to leg in a 1/3 position on this lower positive extreme. Because I want to be at least thinking that I'm going to get a target back to that low in a given day. And then if we move higher and I get a higher relationship for my up-down power, I would be able to take advantage of it a little bit more clearly. But this kind of shows you that shorts started a little early with their shorting, and now they've backed off a little bit on the break of the high. And that's often what bulls will look to do, is when they know they get this huge kind of gap, they look to take out that high, forces some shorts to cover, and you know what they're doing? They're selling into those shorts who are covering. And the shorts are a little gun shy. They say, oh wait, I'll wait for a little bit more. And then all of a sudden the next day or two they get the big drop and they'll be like, oh, I was short and then I covered. And you're like, yeah, I know you did. I know you did. That's okay. It happens. Getting closer to that short target for PCLN. So, and this is why I always thought it was important to include the higher time frames with even the dot alerts in it, because you needed to see whether there was pressure from the upside pushing down on you. Because you can trade some of the smaller time frames, but if you don't have a broader context, you're often missing an important element. Now, was that clear on the up-down power what you're looking for in that relationship? But you know what? I should go back to it because there are other elements. Because even on the downside, and this is what I look for when it comes to the shorting, and this is another good one to pay attention to. Alright, you've come down and you've dipped below your red line. What I look for is an over-exuberance of shorts, along with my bull side being a little bit less negative. And then what happens usually is you get the bulls to pull things back to the upside, and you get a little bit of a fade from them. And that causes shorts to jump back in again. And that's usually when they spring the trap on them, and you get the explosion to the upside. And that happens a lot. And what's easy about this is you can just scroll through back and you'll look at these overbought situations where you get the huge. Now, what sometimes even happens, particularly on the indexes and that, we'll get the huge bull all the way down here and you'll get like an 80, 90% reading, or even times you'll find that the bulls are actually buying into the short and it's actually lower than the bear setup. Unusual, but it happens. But you see, like these, you get these high ratios. Look at this, a flat day, and look at that. I mean, the relationship right there lets you know this thing's about to explode to the upside. And those are what I look for, particularly when I'm preparing for a coming week and looking at a setup, that's going forward. Because you get those kind of setups. They don't happen a lot, but when they do, very powerful. And you really got to take advantage of those kinds of setups. Um, so let's pull this one back down. Now, I've gotten rid of all my other indicators. What do? Well, very easy. You just go back, you can right click, analysis. We can just go through and pick the ones we want. If I wanted to check the ABM to write it, I could have just clicked that. You can see the ABM sort of plateaued. Should begin to make another up leg there if you were writing that from a stop standpoint. But once you get into the positive extremes, I automatically bring those stops up, because what you don't expect to happen if you're going to continue this leg to the upside would be a violation too far below these lows, because you're going to get another buy signal from somewhere else. So there's no need to give too much of a latitude. Alright, so we can disable that one, but if we go back to our other ones, we want to put back in the power mo. Right down here, we'll just click it, and it pops back up, and it goes right back in the same spot it was. Okay? So it becomes very straight E. Shakeout indicator, click that one, boom, goes right back where it was. So it becomes very simple to put these back in, remove them. You'll notice that I try to keep them, number of them minimized so that it's not overly complicated. For me, having 4 or 5 of them would not be a problem. Expanded ratio histogram, we would click that one next. And there you have it. The whole kit caboodle is back in place. Oh, but look at this huge buy signal that we had from Cat right here on the power momentum. This is a great one to look at. I'll just disable this one real quick so we don't have to go through that process. But look at this. We talked about this the other day when this went negative, that was a huge buy signal. And you can see the carry through from that. Gosh, what else did I point that out? There was another stock that we saw that, and it was an excellent play when you get this negative divergence, because you're not supposed to have the cyan move to a negative, just like you're not supposed to have extreme histograms move positive. And so this relationship becomes very clear when looking at overbought extremes in that, but you're not overbought extreme when you've just turned from a red trend to green trend, because all you've done is seen an enthusiasm change and everyone's piled into it. And that's an important distinction, because people need to be able to differentiate between really oversold and a situation where it's just had a nice move. Alright, well, 650, 93, getting closer. From our 5,000 tick, we were trading that to the, oh, we got a buy signal in there, didn't we? Interesting. So let's just go in here, and we'll just go ahead and boom.
Order filled.
Alright. But we know our stop has got to be a little bit lower than that. We'll just move it right there. Okay, so that's an ad hoc setup, and that was within this overall Opus program. Now we can go to our settings on this. If I scroll across here, we can click settings, and we can take a look at some of the valuations. Now, I posted this on our website. Let me see if I published it. Yes, I did. Okay, let's go ahead and go to the website, and we'll take a look at where I put them, so that you, with the indicators, can just go right now and upload this exact same setup that I'm putting on here right now. And that's always convenient to be able to do. And what I need to do is reduce that. Okay, perfect. shrink down the web page so that we can visually grasp it. Alright, so main website page right here. We would scroll down to MBI Opus Strategies and Indicators. And in this particular case, we would go to the Strategy Performance Setup tab. On this particular page, you'll find here also those Real Gamble setups, and you can see those videos. I'm probably going to stick those in with the tutorials as well as with the about information, and we'll leave this for just our strategy performance reports. But if we go to the strategy performance page, oh, and Linda, yes, I will get to putting up Home Depot for you. I'm glad you reminded me. But we scroll all the way down. This is just all the individual MBI Opus ones from our daily strategies. But here's where I just put in this 10K Opus strategy and the 5K version. I haven't even done the 5K version because he just literally, the member just gave it to me the other day. And we'll give Andre credit on that because he's taken the time to go through and optimize these setups within the overall configuration. So that's your resource for attacking some of these, and I include a variety of them from also the NQ is in here, and well, we even had gold ones, and I think he even gave me a few on the Euro and that, so I'll get all the rest of the ones that he's provided up through, and then I'm going to update the most recent readings that we have for our daily Opus setup. But here's where it is. You just go through and literally you can click these and change. So in this particular case for that setup, he's allowing for a 2.2 times the ATR for a stop. So that's what I really wanted to look when I was just playing with that stop real quick. I wanted to see what the overall adjustment would be. 2.2 times the ATR is what that's calling for. Now, specifically, though, we need to go to what the actual signal was. So that's an ad hoc. So let's go to the ad hoc. And we scroll down here. There's the ad hoc. Okay, so the ad hoc is true. Here's your ATR has to be under 30, which is good because, you know, huge ATR would be crazy to trade. Okay, and, well, it's pretty straightforward readings on the various individual things. Nothing special as far as target or anything like that, and so we just let that percolate. Let it do what it's going to do. Now, if we wanted to know what the ATR was just offhand, we would just go back here, and I have ATR set up right there. I just click it. Now, I like it overpriced because here's what I can do. I can just go right over it, and I can see the ATR is 2. So that means I have to have, you know, 2 times 2.2 for my stop. So, roughly a 4.4 stop. Fine. Okay, and then I can also calculate what that profit target was to the upside. So, pretty straightforward. Yeah, well, we'll just see how it goes. I mean, no real concern with that one. Let's go ahead and flip ourselves to Home Depot. Just for the fun of it. That was interesting because, you know, with this big pop, we have seen a lot of stocks give some short signals. Ton of them have gotten overbought, and a lot of them are at the precipice of trend changes, which become very significant. Because, like I usually tell people, usually a shift from a red trend to green trend, particularly if it's a nice up bar, usually you get a day or two of a little bit of a retrace, pull back into them. More often than not, because it's MACD buyers, then you want to sell into them, get a little bit of profit. Gives you a little bit lower entry with those. So definitely something to take into account. And let's take a look at what we got here from Home Depot with all of our various indicators. Now you can see bifractals all along this setup right in here. What we had going forward, and let's go ahead and take a look at the indicators a little bit closer as we pull them up. Alright, you had kind of a sad setup in this particular buy signal, coming off of, you know, deep red trend right here. You got a nice little pop and you get the signal. The problem you have with this one is if you're looking at your expanded ratio histogram, notice what I talked about. The yellow is below the orange. Now, in this particular case, I'm definitely suggesting that that's likely to retrace the low even more than my discount. Alright, so just from an experience standpoint, look for that kind of setup when you see it. More often than not, like in the 80% plus range, you're going to be pretty successful. Is that always the case where you have yellow below the orange? No, no, no. You need to have it where you're getting into extremes. And by that I mean you've got to be either well below this green line or to the upside well above your magenta, and preferably you're really off the highway because you've shown a momentum shift by moving into these negative 13 plus 13 range, which are the very top and bottoms of the. And I can't call this an oscillator because it's not based on you're overbought when you're up here, you're oversold when you're here. That's not how to read this. There's no correlation to that. What you're seeing is the transition of subset fractals and how the buyers are transitioning within the overall move. And so basically think of it this way. They don't really care what the price of a particular security is. They don't have an attachment to it. They don't have any feeling about it one way or another. They're there to make a very specific targeted entry, exit, that's it. They'll leave the fundamentals and all of the analysis work to everybody else. And this is exactly what I say, and I kind of posted that, I don't care what any of these companies do. It doesn't make any difference to me. What I'm looking for is good liquidity in them, their ability to move up and down, and taking advantage of, those kind of setups. And so, let's see what we ended up with after it retraced the low. Okay, well, you move back up here. We ended up with shakeout reaching what I call the danger area, because it becomes very difficult at this particular point when you're looking at, and I'll just zoom into our shakeout a little bit tighter so that we can get a real tight view on it. What happens is you had a minor dip below and you come back right to about near even. And this becomes always a difficult spot because at this point you've dipped below the blue. This is would appear to be an attractive setup going forward. But for the fact, look at how big those bars are in the yellow above, showing you your distribution. You had your one day where buyers tried to come back into it. You got the bifractal, but every day after that, continuation until right about here. And if you look at that power momentum, you went into one of the lowest levels that you can imagine. And let's just go ahead and disable these so we can go straight to the power mo on this setup. And you can see how low that got. And it became a virtual tie at that aspect. I mean, you're down at 10.4. So your readings have pretty much plummeted to nothing. You're below your red line. At this point, I'm looking to jump in on any reasonable signal and discount at that point. You ended up next bar getting your new orange dot fractal cyan. This becomes a much more attractive setup going forward here. You still understand that you've moved below the red line, so you got to retrace this low right back over here, which in fact it does. It doesn't really penetrate it too much below that. These guys don't look for perfection as far as that. They're just looking for a roundabout way to average in without being exposed for what they're doing. And I know that sounds so imprecise and flexible, but in a sense, it's really the way they approach it. They're not looking for, this exact move. They're basically just saying, okay, I need to acquire X number of shares without anyone knowing it before I then no longer offer it. And because here's what a lot of people don't understand about it. They're both buying and selling within this, and the idea is that at the end of the day, they want to end up with just a little bit more than they sold. And so when people look at money flow and some of these other indicators, and they're trying to find block buyers and stuff, that's not these guys. That's not what they're doing. They're never going to show you their hand like that in a million years. And don't even bother putting it on a chart in that, because it's not worth wasting your time to even look at it, because it's not going to give you anything. Because these guys are, concealing themselves within these small fragments. They're buying 10,000 over a course of X number of minutes, and then they're selling, 9,400 of them. And then they're just leaving a tiny fraction, and they're doing this all day long within, the overall liquidity of a stock. And so while people are looking at overall volumes and that, they don't usually try and change the volumes too much, or if there is a spike in volume, it makes it even easier for them, because then they're able to just really hide themselves well with an overall setup. So here you can see that even with HD on the daily, it's reached positive extreme right there, almost got to zero, not quite, negative 0.13. It's about as close to zero as you get. and currently it's a -2. So now what's interesting about that is you think, okay, Home Depot overbought. Close. But here's an interesting one. This is like what's happening on Apple for its daily. You get to this spot, you get a little bit of a retrace in it, but the extreme histogram starts to drop quite a bit. And what I look for is about a day or two and seeing an extreme histogram that maybe gets into the -25, -30. And boy, that is an attractive long side setup, because what that basically means is you've lost, overbought, and most people will not see that because you're only going to get a fraction of a discount. You're only maybe going to come back and retest this low or just a fraction below it, and then all of a sudden it's going to spike again, and people are not going to understand why it's spiked. But you're going to be able to see it because you're going to have already seen the extreme histogram started its roll over. And why don't we go ahead and I think I've got an Apple chart somewhere around here. We always do. There's an Apple daily chart. You know what? I forgot to expand my screen for you. Yeah, thank you. My fault. I forgot to expand back up. So we were looking at that tight. So back over here where my cursor was on the Home Depot, I was showing these readings all the way up here. And now you've started to see a decline in the extreme histogram. That's very bullish. What will happen is when things are getting overbought, the extreme histogram will continue to the upside positive. So, good way to see that one. Yeah, I'm sorry about that. The zoom there. Let me go ahead and put the Apple Daily, and you're going to see a very similar kind of thing. Alright, in fact, we can either get rid of price or I can zoom it so that we can see. So, we had it shoot up, and now you get a little bit of a retrace. This is minor for what we saw in the move, but nice dip from the extreme. So we went to -5, now we're at -11. So Apple's no longer overbought. Period. I mean, that's end of discussion. You don't even have to talk about it. It's yes, it reached its primary target there. Nothing overbought about it, and it's at that pivot danger zone. But here's the difference that you're seeing between it and the ones that we just showed. Notice the orange is below. Okay? So, here's last time. Orange dipped below off of that. So people thought it was overbought here. It was partially. Tiny little retrace. Came back a little bit, but that move of the orange below and then take off. And then you wait for it to really get overdone. Okay? So it's like, sometimes you just have to wait. I know that's not attractive to say, but you just have to wait for it. It gets exciting, and you think, oh my god, this is so frothy, and it's going to drop, and you're looking at your support resistance retrace lines and everything, and you think it's got to, and no, it doesn't. It does not. So, someone said that the PCLN is almost there. Let's take a look. Yeah. Okay, well, what can I tell you? What was the low on that? 648.50. Yeah. Okay. Well, and the exact was 648.59. Right there was the exact down target. So I would say that that's in the bank. In fact, let me go ahead and take care of something real quick, because I might as well execute that one. Hold 1 second. Okie dokie, I'm back. Had to take care of that. Yeah, I had to switch over from the Google. Okay, and alright, well, this is the 78-minute, so let's take a look at that. And the 78-minute one has a little bit further range, 647.49 right down there at the bottom. And so that one's seeking just a fraction more, but originally we were doing this 15-minute. Now, let's look at the 78-minute. Okay, still bullish in relation to this setup, so I think your time is winding down. So the first thing I would be looking at right here is this right here. So the fact that I do have my first yellow over, okay, maybe I'm going to get to that 647, so I have a little bit left, but from that 15-minute standpoint, fine. Now look for the little bit extended, but much tighter stop, and not going to give up much on it from where it was, because you can see that that's still bullish from the ratio histogram, and you got to pay attention to that. Now, what's likely to happen is we've moved to the extreme here. You can see that we dipped down, pop back up again, and what I would look for in the next few bars for this one, of course, is the last bar of the day that's forming right now, and yeah, per se, that you're likely to get a little bit of a retrace. The problem you've got now for PCLN right here is it's pretty extreme on this overbought, so any up move here is likely to get sold into a little bit more. They won't push it too far. They'll let it come back up, and this is where you'll find your little double top. So what they'll do is they'll just stop, the sell. It'll float back up under its own lack of pressure. Okay, so think of it as guy's got his hand on the boot, pushing it down. Now he just says, okay, I'm just going to take my foot off the brake here, and we'll just let it kind of pop back up again so that I can attack it at a little bit higher level, because they like getting the maximum value for their trades. And they, when you're looking at it from the daily standpoint, we know we've got that downside daily. That you don't have to press it. All right, you want to take a look at Microsoft. Jeez, Microsoft. Let's go ahead and put that one up here. Oh, while that loads, let's take a look and see how our ES is doing. Yeah. Okay. That's alright. I'll go with the VWAP right there, which is the current midline of the price. That will be premature, though, to that overall ES daily signal. Where's that ES that we had? We even have an orange dot. Maybe I should move it up to my orange dot target here at 57, but we're just goofing off with that just to show you what we're looking for. Alright, well, Microsoft Daily, look at that. Isn't that nice? Well, well, well. Someone may have pulled a gem and didn't even realize it. Alright, let's go look at the configuration here. Let me do this. Let's just go ahead and disable our power mode. What we'll do is we'll go through them one at a time individually, and then we can look at them from a collective standpoint as well. Okay. Alright, so Microsoft, let's squeeze it in a little bit so we can look at a broader range. It's always good to get that bigger idea, and you can kind of see it's been an ugly downtrend quite a while. Popped up here just briefly, got overbought. You can see that the transition, and a little bit clearer here, you notice that it changes rather effectively right at the key points, and then went red ugly there, did it again here during this down slide. Same setup right after it got a little bit of a pop, went into the negative, and then boom. So I end up with the orange dot right over here that we can examine. This is the interesting one, because I can go through all these charts for you, and we can take a look at them, and you'll find that how many different ones have I put up already that showed buying into the fiscal cliff. There was no deal. Everyone said there wasn't going to be a deal, and yet all I kept getting were buy dots. And everyone told me, well, not everyone. Some people were saying that, oh, you're crazy, it's not worth the risk, blah, 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 blah. Okay, well, these guys are applying themselves into a position as significantly as they were. I don't see that as a risk, and this is where I guess it just really depends on, what your indicators are, and how you evaluate them determines whether or not you see it as an excessive risk. Was it an excessive risk taking this long trade based off that setup? No, because we had a near 83% win rate, and this is even a portion of that target. So why not, take advantage of those overall setups? We need to get a little bit more of a view in order to see that. There we go. Just kind of gives you the size that it's up against. So it's moderate. Now, you see that they kind of even out overall. Yeah, let's see what we got overfilled. So, there you go. Just made a couple of trades live while doing this. Nice fun. Alright, so back to our ES setup here. Not ES, Microsoft. So, here's the dip. Gave you a discount. Alright, in this particular case, we had a minor range, because you're not going to get a whole lot of the movement. But still, 40 cents. So, we were looking for at least a dime. You'd be looking for at least 26.40. Somewhere in that range. You drop down to 26.37 next day. dip below the red line. MBI comes in, just kind of adds it. You already knew that they were adding into this setup because your power momentum already told you that they were buying into this decline coming down, and boom, pop. Now, did you get overbought here real quick? Minus 11? No, not. And now you're minus 14. So the fact that you've switched from red to green trend again, like I say, you look for a little bit of that pullback. This is still attractive. So from the upside, Catfish has 28.27. So there you have it. Not bad. You still have the potential for a dip down to your retrace of that low. Yeah, but probably not immediately off of this kind of setup. The fact that you're already getting a red trend discount is perfect within here, because that was about 60 cents. So you'd be looking for about 20, so 27.40 range. And if you just put in a buy stop at that point, you'd be fine, or you could trail it lower. Either way. Now I feel bad that we exited that ES too soon, because I think that we probably were supposed to stay in there longer. Well, even the orange dot had us going up for 14.54 was the buy, and the target was 57.29 for that orange dot. Yeah, you know, it's okay. That was a tiny trade at 5 contracts. Normally we'd be in for 20-25, so that was simple. But you can see, very effective. And again, you know, looking at our overall performance now, if we wanted to, we could have broken out individually the performance of just that ad hoc. We could turn off all the other indicators right now from the strategy and see just how many trades we would get from an ad hoc and what the win percentage rate is. So you can refine and finite specifically what each individual setup does, and that becomes very effective in looking at repeat performances and things like that. And this happened to be the 10,000. I mean, like I said, I hadn't even gotten to the 5,000 one. In fact, I don't even think I have it on here. No, in fact, we were using this chart for regular stocks, so I don't even have it on there. But to do it, we would just insert strategy, and then we can go over to my strategies, and boy, we have quite a few of them. But for sake of argument, what we're looking for is the MBI Opus. Now, what I wanted to show in particular for this is if we go to our status on it, is it's this one right here. So let's move it all the way up. Alright, so we've moved it up. But then you can go to your properties. And within the properties, it gives you a series of setups. Now, if we wanted to automate this, I would do strategy fill, and I would adopt the real world position, because you're trading in the real world. You got to do what the real world suggests, and you don't need to wait for your confirmations or things like that. You just have to trade it like there. Normally 250 per contract per trade. Position slippage is not necessarily important when you're talking about something that's a little bit more generalized. You can put in a specific amount or per trade. I know for the MBI Opus, even when you're looking at my 80+% win rate, I'm putting in a slippage of 1250 per contract per trade. Other side of it here, allow 2 entries. If you're doing it in thirds, you would just put a third, regardless of the order, and that makes that pretty straightforward. And then into your format, this is another little key one that you would go to. You would go to your entries. You can change what it looks like from that standpoint. You can also alter the colors of the lines, what it basically says. You can change it up here to your buy. And then the calculation, and this becomes interesting because normally it's a day trading, per day, not a intraday. So in order to make it intraday, you click on the calculation, you go to intrabar, and limit your entries to the signals once. And same thing right here, your exits once per bar. And so that's all you would need to do to set up that one. But that's important to have those from the standpoint of working on something like this. And you wouldn't be able to do it, again, like I said, you can't trade this automated on a at ES. It has to be the actual ESH for the current contract, and that's what you would do it. But from a study standpoint, well, see there, you can see it plopped in the buy signal. Now we haven't formatted this one, so there's no adjustments. I don't even know what this one. So just right out of the box with the current settings, let's see what it yields. All right, so just pretty much a flat program, but 58% win rate. And this is what I find very interesting, because you'll see this a lot on, gosh, MACD. I think even on certain stochastic setups, decent win rates. And people will talk about that they've got, win rates in the 58-60% range, but they don't make any money. Okay, and it becomes an interesting one, because fine, if you're winning 58% of the time and you're not making any money, then maybe you should be converting that to a short and only winning, a little bit less. And if you can take out a few considerations, you might even be doing better overall. So throw that one out just as something to think about. Because I find that with a lot of my strategies that are around the 58-63% range, you need to have bigger stops and bigger profit targets. And usually I like to get a relationship where, like you'll notice that for our up target for the dots, we're at 1.236, and when you're talking about the stop, it's only 2. So inherently you already have a positive bias but at that point you don't have to quite win 2 to 1. Even though our win rates are higher than that, it just means that our profit factor goes up exponentially. So it becomes just a different relationship when you're looking at it from that standpoint. Alright, let's see what we got. Let's put our intraday chart up here. It was a Google 15-minute. What should we look at? Let's put an Amazon daily up. I haven't paid attention to that one all day today. See, it keeps the old writing from a chart. And the nice buy setup hit the target, so that's all good. If we look at it from a daily on the power momentum, you can see that a little bit of selling going into this up move here. Turn it back around to the right side of it. Now would be time to watch the shakeout within that. Let's even look and see. We have the up-down power on this one. Not sure what I call the extreme histogram. Let's see, format analysis techniques, up, down power, not on there. Okay, so and I didn't put that on a lot of these charts going through, so we'll utilize our cat chart when we flip over. Let's take a look at Buffalo Wild Wings. I saw one of those the other day in our area, and I've never been to one. But I know this was the hot commodity stock for the longest time. Now, this is a perfect example of what I was talking about pre-fiscal cliff. Alright, look at that. Every day was putting in a bifractal. Every single day. Coincidence that it pops back up to the highs? No. So I think, what did they announce, that when someone picked up like a 5% stake in it? Well, you think some people didn't know that that filing took place ahead of time? Yeah, they knew. Alright, they let it bleed while they were sucking it up the whole time. Then there's no more supply left, and kaboom. But let's add in a shakeout indicator and the expanded ratio histogram. Alright, so expanded ratio histogram right there, and shakeout indicator. Alright, so that puts them all back in. So you can see, no concern here with your shorts in relation to buyers in this particular case, are none. So that's not a factor, so I don't worry about the fact that I just saw this yellow pop up here. So that's where nice confirmation from my up-down power. Now if I had seen the red midway up and had a 0.7 relationship, yeah, I'd be concerned about that setup as being overbought. But the fact that I didn't see that, having this case right here, left us free to explore the possibilities to the upside. And there you have it. That was a nice one from Buffalo Wild. Now, I like to squeeze the charts down often just to get a gauge, because if I just went ahead and got rid of the price tag here, you begin to see where there were peak moments, even in this red trend, where it's overbought, 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 but now trend turned green. So you have to look at that in a different light and say, okay, no, I can't just rely here. I need to now start taking a look at what else is going on. Now you'll also notice, from a broader perspective, notice how this is a much higher shakeout reading compared to this whole move right here, and yet we made a lower low. So they dipped the low, stopped everybody out, and took their shares. Easy to see them do it, and exploded it. There's no other way to describe it. That's just basically how it took place. So it was a fun one to watch. You know, and I thought I'd started to go through some of my Dow 30, but I got interrupted the other day and I didn't get a chance to run them all. I know some of them were reaching and overbought. You want an update on CAT? Sure, we can do that in a second. Alright, so expanding American Express here, you can see that got right up there to the peak. Now this one shows the yellow over the orange. That's going to resolve itself to the negative side, and so now it's just a matter of waiting for that right relationship. And you can see much stronger short presence and consistent right here. I usually look for about 3 bars of that, and then I know that these guys have added in a very soft short setup, and nobody's going to expect that. So that's good to see that one there. That's going to put some pressure on financials potentially. And what we would do is go to JPM, take a look at that one, because they're going to do it first with the big stocks because they can hide the fastest. Yeah, same setup. So, does that make me want to jump into the FAS to alongside with Donald Alerts? No. Does it make me interested in looking at short signals that come in on the FAS? Yes. Just that easy. And now I'll go ahead and put CAT back up. I think I may already have that chart. Let's see, we already have it up. Home Depot, did I flip? There it is. Okay, Caterpillar. Now, I don't think we have up-down power in Caterpillar here. No, we don't. And if you don't see it on that little sideline, I always go to my full sheet of indicators. Not there. So let's just go back to the other one that has the up-down power, and I'll use it and just change the name. That way we don't have to put it back in. Okay. Oh, that was another good one, because if you're running all these indicators, let me go back to this real quick. When you go into scaling, you'll notice here I've clicked the subgraph. I usually put in around 15% above and below, and what that does is that gives you room at the bottom as well as up at the top, which is why on the extreme histogram I've left these additional lines up here even though they're not in histogram form, because at least it pulls price down a little bit so that when you do get these dots over, you're able to see. So from a visual standpoint, it gives you a nice little heads up. So like I said, Caterpillar, no change. We're going to end up with a lower positive extreme unless there's some huge move right at the end of the day. You can see that there's a little bit less shorts than there were before, but they've begun to build a position in here. I would look for it one more day. Again, we're still waiting for 5 days after red trend turning to green, but there's nothing wrong with legging in on a higher close, lower positive extreme. That's just one of the classics we look for. So, excuse my drinking right there. Yeah, nothing adult beveraged yet. It's early, maybe for a cigar a little bit later. Made myself choke on that. That was too funny. Yeah, I know. You're laughing over there too. Yeah, why not have fun? Okay. Oh, hey, how about Netflix? Anyone want Netflix? I get Netflix all the time. Love watching those. Speaking of which, I should put up that link for that TED series. Let me go to my StockTwits and do that in a second. But I just wanted to show that about the scaling because it's good to have that range going above and below in the subgraph margin, and that just gives you a little bit more of a visual without kind of squeezing price down. And this is why you'll find sometimes that I'll expand the range or contract it because it will let you see a little bit broader perspective. And this is one of those things where it's like I talked about cat going back from here. Um, we've had so many nice buy signals. We even ended up with that halibut, a little bit of a retrace in it, and then boom, it took off for a nice run. And you can always stick your ABM. And again, this points out, to me, is it surprising that when I tell people, TradeStation is offering you a free opportunity to flip over and take a look at their platform, and I'm here to tell you that I'm going to give you week plus of the indicators to take a look at. Does it make any sense not to try it? I don't think so. But it's always good to get an understanding of it. Alright, let's go ahead and put up MA, because I had this long discussion with my friend about MA. And this is just something that I see a lot of, where people will start to short something a little too early, and or get out of a long a little too fast. Alright, I got our ABM in here. We got too many lines. Oh my goodness, let's get rid of some of these lines. Okay, that makes it a little easier. Kind of squeezed it a bit. Let's zoom back out and we can... Oh, that gets us a little too tight. Can't really make out what the trend move is. There we go. Alright, I'm going to lose the ABM real quick. Alright, so let's talk about what I was seeing right here. Okay, so the other day, at the close, we ended up with a red dot short. Some people had said that they had already shorted previously, like even before this move higher, which I didn't understand, because we had had the bifractal. We also had the up target. Didn't quite get hit last week before the pop, and boom. Okay, so it popped. So at the close, I'm like, look, yes, we got the short signal. However, okay, we need to look at a couple of things. One, yes, it's going to resolve positively, in my view, to the short side, because the yellow is below the orange. Okay, saying the yellow is below the orange is the equivalent of saying there's a gap and therefore it must get filled, or there's a line at this point and therefore it's going to retrace because we have a Fibonacci and therefore it must retrace to that Fibonacci line. If I said those things, you'd be laughing, because they make no correlation whatsoever to each other. None. And yet, this is what you see in most of the, comments from people going through. Now, the difference is what does a line on a chart represent? Okay, if you're saying that it represents a certain number of areas where buyers have shown consistency, fine. I have no problem with, because then we're starting to talk about some kind of basis for it. But when I see someone, just take a random line and draw it up there and say, okay, that's an uptrend and therefore it's broken, and that means the stock's going down. No, you're not going to get me on that bandwagon. I've been down there with the technical analysis on that. It just doesn't work. There's just no probability or advantage in doing that. Now, just that the same thing as looking at what we're seeing here on the expanded ratio histogram? No, because you're looking at about, in this case, for something like MA and the time span that we have on this chart, you're probably looking at, several million calculations that go into, well, both from an intraday, because there's a subset within this, and then within the daily, filtering for these specific patterns that take place. So, yeah, this has significance because of what it represents within these two fractional setups. Now, I can throw in the third one, but then I start getting so complicated that what I want you to begin to start with, take a look at these relationships when you see them. Then you can also take a look at what is the relationship of the cyan line, its direction, in correlation with these as you go back in time. And, for me, with a giant screen, I just put it up on a big, my 60-inch plasma here, and I can see, 5 years going back, and you can identify these situations very clearly and when they come out. So again, similar to what we're looking at right now in MA, okay, this one had the buy signal, but I'm looking at this setup right here where it's dipped below, so I know it's going to resolve to the short side. Does that mean it's going to do it immediately? No, but gosh, in this case it took a couple of days. Fine. Even though I'm in green trend, I'm going to be looking for a discount on the short anyway. So that becomes optimal within that overall setup to look for these kind of identifications. Now, orange above the yellow on this little down move, am I looking for an up? Yes. Okay, so you begin to see some of these setups over and over and over and over and over because they've been so effective for these guys, they're not going to change. They're creatures of habit, and why wouldn't they continue to do it? Okay, and that's just interesting to show how these approaches are continuous. They don't alter, and you can see them from stock to stock. I mean, let's just randomly zip back here and look at what the date period is. So this is back in 2010. Alright, so we can go through and let's find extreme setups right here. Alright, here's an extreme setup, popped up above. Yellow is above, so we would expect it to move lower. Did it move lower? It did move lower and resolve to that side. You even got a little bonus because you were fighting the positive aspect of the power momentum at that particular point because it had not gone, but needless to say, resolved to the same side. It just took a little bit longer time to do so. Sliding back, orange is above the yellow at this particular down spot, moves up, no problem with that. Consistent uptrend where the orange stays above the cyan. Look at how long that was. Alright, you tell me how hard that is to stay with a trend like that when you see that orange consistently ride above there. And then we start to get into trouble here. You end up with another buy signal there, but then, ooh, yellow pops up now. You've gone 7 months of straight up, everything climbing, and then boom, you get a signal that tells you you should be thinking about shorting because the yellow has gone above here, and at the same time, while price is moving higher, you're seeing shorts are selling into this setup. You get another pop going forward, but then look at that. So people say that there was no way to know that some of these things were about to take place. This is before the flash crash. All right. I remember talking about this, gosh, for Caterpillar and some of the others when they were coming up, because we were short that setup overall way back in the day as we watched stocks plummet 1,000+ points. That was a crazy day. Alright, so going back here, we can go to some of the other ones. Now, in a case like this, right there, yellow is greater than the orange, and you've dipped off the highway. At the same time, you're getting a red dot short. Okay? I'm just pointing them out. You can take a look at them on your own with the indicators, and you can see these relationships. Are some stocks going to vary slightly? Yeah, certain stocks will. You're not going to get the kind of variation from the indexes. They're usually pretty consistent. But what I like to watch is when I scroll through a chart, am I seeing my dots appear at the bottom of moves, and am I seeing gray dots and red dots at peaks? Buy signals, sell signals. Okay, buy signals, kind of hangs flat, nothing really positive with that. And you can see the orange stayed above even within these setups. You had the yellow over the orange going forward in here, which gave you a little bit more of a cautionary tale. Even on this setup, though, was still looking a little bit more bearish, and it kind of turned around. So that caught him a little off guard. I think that probably propelled that one. But then you can see the orange dip below right here pretty quick, and then took off again. When was this? At the end of 2010. So this was right before a huge run up. Yeah, now see, here's where they got burned on this one. This one didn't work out, so finally, okay, we're able to show some that didn't quite work out effectively. Now you can see those positive extremes, but look at what happened when you get that positive extreme after to the upside. You didn't get a negative higher close with the lower extreme until right here. So if you shorted right there, you would have had some opportunities where it would have come back a little bit, but ultimately you still would have been stopped out of that setup. Not very effective on that one. And that's going to happen. Nothing's perfect. Always good to see the situations, but predominantly, again, that's what I'm looking for. Am I capturing bifractals at bottoms of peaks in general? And you can see that it is. I mean, it becomes pretty straightforward. Do you know at this particular move that you're going to get a 15 bar move? No, but you don't have to. KCLN hit its daily. Couldn't have hit the daily already. Are you kidding me? Oh my goodness. Well, it hit the 78-minute target, that's for sure. Alright. Fine with that one, but let's go ahead and put the daily back up here. thought I had a daily one of it. Let me see. There's the daily. So, but the 78-minute chart was really what we were focusing on from a resolution standpoint as a beginning. So, I see what you mean. You went PCL and hit the daily for our 78-minute swing short. Yeah. And did that fly in the face? I mean, I know I got some people were like, are you kidding me? You really want to short into that, massive upgrade, blah, 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 blah. You know what? I only knew that it had received that is because on Twitter, a couple of members pointed out that PCL had got upgraded. All right, well, that's the only reason I knew it. I could care less. It didn't make any difference. It doesn't make any difference in my mind. Because these guys aren't playing the news. They are the news. Is the way to look at it. Think of it this way. Your dots in that are basically breaking news. When you actually get the news, it's pretty much like you've gotten a newspaper. Old. And if you think about it in that context, when you hear and see news, you won't be affected by it as much. That's what I think is helpful about the indicators from a reassurance standpoint. You know you're going to have moves against you. You're never going to get the exact top. Sometimes it's pretty darn close. I mean, this close right here for PCLN when this 78-minute short came through, and feel bad for those of you who maybe weren't watching or didn't get your dot alerts this week. That was a beautiful one that came in at the close right there, 657.06. All right, what did we have higher? 657.18 was your peak. So that was the best you could do. So. Fantastic. So that was a nice one for PCLN. And good fortune for some people. Do I think that they took it? Because I gave 3 or 4 people the opportunity to get the dot alerts for, they've never tried them before. And they had got on the wrong side of this PCLN trade. So I went ahead and hooked them up for the day to go ahead and let them try the dot alerts. Do I know if they traded them or not? Yeah, doubt it. But hey, at least they get the opportunity to see that it's not fortune telling. We're looking after the fact. All right, this short comes in after it's already detected what's been done. So you're not predicting anything as much as seeing the effect of it to come down the road. And that's why we have our 6-bar general target. So there you go. Glad that someone got out of their long calls just in the right time. And that's the way to time it. That, to me, is good timing. Very nice from that setup. Let's see, what's Apple doing right now? Nothing special. There were a couple ones that I was looking at earlier. Oh, LVS and that, we did those, were excellent. Let's put the FAS from a daily standpoint. Because we saw that overbought status with the other financials, American Express, JPM. Let's see if it's going to translate itself into the ETF early or later. Sometimes, and you have to watch it, sometimes the ETF will be before, sometimes it'll be lagging. Alright, from a daily standpoint, the ETF already had the short signal in. Okay, and today making a lower positive extreme. So, yeah, feel fairly comfortable that you're likely to see that retrace. So, this is where if you're going to be trading the dot alerts for FAS, you definitely want to be sticking with your shorter time frames and not getting yourself too caught up into it. If we look at the up-down power relationship, yeah, see, this is where you see the consistency of, we saw this on the American Express JPM, a little bit more of a consistent short setup here. Let's look at what the ratio is, to be precise. So if you wanted to do this, you would see that 4.79. I'd just ignore the decimal point and just would take 479 and divide it into 884. And that gives me 54% is where it is right now. That's kind of neutral. You need to be in the high 60s and definitely over 70% as a clear signal for short. But in this case, you can go ahead and take the fact that you've got lower positive extreme And you can clearly see that, and this is what we're seeing expressed in a lot of them, yellow below. So we expect that these will get resolved to the downside based on what we're seeing from our expanded ratio histogram. And it's a good opportunity to kind of show this in effect. And look at what happened right here when we had this same one, same yellow below. You can see that you still faced a little bit of heat to the upside, but ultimately you resolved yourself, and within the time frame. Your 6 bars. Is it tough for some people to wait 6 days before they do something? Yeah, I find that that's a big problem for people. Even a 2-day, 78-minute trade for a lot of people is tough. But that's the way it works, and you've got to be able to adapt yourself to the real world. LVS, WLT, what is going on with WLT? Now, see, I'll put it CLF. We sold calls on CLF because we knew that it got a little frothy, and we were expecting a bit of a retrace. And, yep, in fact, very nicely right into it. So going into tomorrow, but look at, here's what happened. I mean, it popped up over the 25. We saw the negative divergence here. Now, this is a little bit less negative, so this is an important one to point out too. Notice that the orange did not match the dive off the highway here with our expanded ratio histogram. This is an important distinction, something you want to look for. So when you look for this dive, what you want to see is you want to see both doing the same thing together, and pretty much in close proximity. Now, did the yellow have to dip below? No, but it needed to be below the green right here. So the fact that the orange was below, that was positive for an up move. And you can see we caught this one at the bottom when we were in on CLF. So not hard to take those plays. Does it move around a lot intraday, and some people have trouble with that? Yeah, it does, but that is part of trading high beta, and you're going to get that when you look at stocks like PCLN. Alright, so now we're getting a little bit more movement, and this is what happens. You get a breakdown of the low, and it starts to cascade. Now, do you have to exit immediately on these kind of setups? Not entirely. Typically, you can always trail it if you're willing to take a portion of your profit. You have to take the gains on a certain portion of it, period. You cannot just let it all, I'm just going to trail it all. No, because the liquidity and the way these things move, you can't do that. You have to actually take your gain on part of it, and then you can leave just a small portion of it to go ahead and trail lower. Now, in this particular case, you want to bring that trail down pretty quick, because you'll notice that these guys are starting to buy into that dip right here. You end up with this low segment right there, and boom, right here. So next step would be to look at our expanded ratio histogram. And so this is how you can begin to do this with the indicators yourselves on these intraday setups, and begin to watch them and see how they progress, because this will give you the confidence to go ahead and make those kind of difficult trades where something like this is cascading and you're saying, oh my god, I don't want to be buying that setup. Well, you've resolved your 78-minute. You've resolved your shorter time frame ones, so you don't have that pressure now, and you're going into the last half hour with none of those issues, so to speak. Yes, you still have the overall daily, and that's something you have to respect. And not to mention, we also had some overall downside market pressure too, because it was also at the overbought. So you have to be a little more cautious in trading that. So, but you still can leave your stops. You wait for your dot setups. In this particular case, you've got a nice move there. Could you wait for slight improvement in your shakeout? Absolutely, absolutely you could. There would be nothing wrong with that at all. And that should be. I would love to see the orange though dip below. That would give you your full confidence for your little spike back up. If you could just get that orange to cooperate with being lower. But overall nice move, easy call from the shorter time frame. I know it. Some people had a couple of questions on PCLN, and one guy's like, "Oh no, I got burned. I'm staying out of it." You can't take that approach. You gotta stick with these things because it takes time, and it takes the right configurations in order to get you the setups that you need. And that's generally what you want to look for. So I know this was a little bit more technical, and we dropped off quite a bit of viewers because it gets into this, slower kind of thing. That's why I included a couple of the trade setups within that, and wanted to show you about the ES things and made that available. I mean, how cool is that with the 10,000 tick and then the 5,000 tick? Time-wise, your 1,000 tick is equivalent to, well, less than a 5-minute chart. And the 5,000, I typically look at that as somewhere around a 15-minute chart for the ES. And for the 10,000 tick, you're looking at somewhere around a 30-minute, typically. Just general, I mean, because it's not a time, it's the amount of trades. It will vary, like in after hours, sometimes on holidays, things like that. You could have the entire night go through and only make one bar. You want to look at shorter time frames of Apple? Sure, we can do that real quick. Let's scroll up. So what I'm doing is I'm scrolling up here on my little machine. We'll do 15 minutes first, just to be wild and crazy. Alright, so just by clicking that, what that's going to do is, because I've linked the colors of my stock and the interval, it will actually transition it to that 15-minute of Apple. If I only had just the stock, it would just change the chart to whatever the stock color was. That's going to take a couple of seconds because it's a 15-minute and you're starting to get a lot more activity. So I can tell when there's activity because my processor starts picking up, because that means it's getting a lot more transactions rolling through and it's evaluating a lot more stuff and running it through the subgraphs. Computer is always running the numbers. Never stops. Okay. So, see, these are linked right up here. Color-wise, you'll see that on this chart right here. Now, if I took one of those off and left the interval, every time I clicked a different interval, it would change the interval, but it wouldn't change the stop. Okay. So, Apple turned red trend. Very straightforward right there. Not only did it turn red trend, it turned red trend with what? Go ahead and say it out loud. Yellow below the orange at our dip below. Well, in this case, we just barely dipped below the -7 range right here. Just a fraction. But we were also resolving with negative readings here on the power momentum. And we had cascade below our shakeout. And now you can see we're well below. So what you would want to be starting to look for will be a buy setup in Apple here. Once you get improvement in your shakeout, we're at -16, but now this is an intraday chart, so that's important to look at. You're going to get a little bit deeper readings in your shakeout for the smaller time frames than you will for the higher time frames. So we're -12 on a daily, and when we look at the daily on that, did you see that Apple daily was only oh my goodness, I think it was -6. Let me grab the daily chart here. Let's just go ahead and put Apple in here, because a huge improvement means your institutions are back in the game, which means we can expect to see some really good signals out of Apple going forward. Let's put the shakeout on here. See, and so where some people would be like, I just don't know what to do with it or whatever, I start to get excited about this, because now it's like, okay, yeah, now I've got serious players in here, I've got my liquidity, almost positive on my trend. Once we get back up over, so we should likely see Apple turn, but this is the danger zone. You've come from -30 back to even. I would expect the move down here and a lower shakeout reading to finally give me that real clear buy signal to the upside. So I'm going to be looking real hard for Apple buy setups here, and at that point, will I be going stock? No, I'll be going pure options, because the returns on those will be staggering. I know that just sounds like, oh, pie in the sky. No, it's no different than we were right here. We dropped down to the 505. I wanted to jump on those options because it was a Friday. They had lost a lot of their implied volatility in that, and I was a huge buyer of calls. That's why I told everyone, buy your calls at this point. This is the week to do it. It took 2 days, and those things pounced, and it was easy to get out of that setup and wait for the retrace of the low. So this is where, not every week is an option week, and this is why, sometimes people have a hard time with that overall setup. But nothing I can do about that. All I can do is keep trying to teach it and show what the potentials are. And so hopefully it begins to sink in. So let's go look at our 78 minute of Apple, and that's going to cause us to slow down a bit. SPY 78 minute. No clear setup with that one. Now, this is interesting. When you see this right here, it means there's some errors, corrections for the chart, so you can just apply those corrections, and that will also cause the window to recycle. So from a 78 minute standpoint, we knew that we had a red dot short on Apple. Okay, there was no ifs, ands, or buts about it. It was a pretty straightforward call from the previous day. Okay, this was today, this was the previous day. So we had our red dot short. We're getting very close to that point now. It's perfect because we're coming to that point where we're getting resolved on our red dot short for Apple. Alright, 538. Put that in there. It was never an issue. We talked about it a while ago, back when it happened, and we kind of ended flat on the day. Wasn't too concerned about that. It was no big deal. We knew that we were a bit overbought. And so I put this target. And then some people say, well, but my target's much bigger. Okay, that's fine. But this is where I like to go. We've got our first target. We evaluated that target. From that target, we can move on. Now, we're likely to reach this target, and I'm going to be very excited about it because if we can hold up below, before getting down to our below the red line here on the extreme histogram, then that's going to be very bullish. So it'll be a time where most people will then be saying, "Oh, yeah, I want to short Apple now because I'll be then buying those shares as they're flipping around." So this is where it becomes up, down, and people then start saying it's rigged, blah, 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 blah. And it's only rigged because they're not using the right indicators. And I'm hesitant to even say right because I don't necessarily say that these indicators that I have are right. They're just identifying something that other people aren't seeing with the classic indicators they have. And another thing to point out, what do you see right here on the 78-minute chart? Go ahead and write it out there. I want to see someone actually put it in there because I've just spent the last 20 minutes going over it. So let me see if anyone's at the top of the class and can write down what I'm seeing on that expanded ratio histogram that makes me want to be so bullish. I take an opportunity to take a drink while that I'm waiting for that. And the next time we're live, you can orange above the yellow. Now see, there we go. That's a gold star right there. Yeah, the orange above the yellow. That means we're likely to get a positive resolution to the upside from this. So I will definitely be looking for both the target and or at this point you clearly want to move your stop down closer to better than break even, where you have at least a profit locked in, because that's a pretty strong move to the upside. So they are definitely buying up the selling in here. We do see there is some selling in that, because all the way back from, gosh, yesterday, when we saw the yellow moving above here on the power momentum, and you can clearly see that one if I enlarge it a little bit more for you, and you can see pretty strong. Barely got back to even there on the little pump, but all day sellers have been active in it. And that means that they've been just selling into a lot of buying, because you haven't really seen any major push up. So, nor have you seen a huge drop, which means that there's just been a plentiful amount of supply for them to sell into. And, we'll just look for our first bifractal setup within that, and that should be golden. So, no need to get shy away from that setup at all. So, always good to see those things. Go back to our PCLN. Is it recovering as expected? Yeah. It doesn't take much. Once they see those little things, you've hit your target, you get the little extra flow, and bingo. I haven't been on StockTwits. I don't know if anyone has decided to go and comment about us hitting our target there. Feel free to do so on my behalf. Be happy for you to like anything. I'm just looking at some of the comments there. Well, hopefully they come to the live feed and they can learn about these things, because I can't always describe in detail some of these complexities in 140 characters, or even in a picture. Um, it becomes something you need to see over a course of time to absorb, and then you always have those aha moments where it's like, I see that now. It makes sense to me what's happening. Do you know the math behind it? No, you're not going to know the math. It's really stupid, ridiculous kind of math, but it works. And I mean, at the end of the day, isn't it? You don't know how your car transitions some of the electronic things it does these days. I mean, it's no longer just a simple combustion engine. And if you think about that in the same context of your standard indicators or just your normal combustion engine, everyone has an idea that gas flows in there with some air, a little explosion, the piston moves. All right, but now with the fuel injectors and the electronics that combine with it, it's a little more complicated. Well, these algorithms and the computerized trading have made it a little more complicated. That's the simplest way to describe it. And it's not a bad thing, it's not a good thing, it's just what is. And you can ignore it, you can pretend that it's not taking place. But what you're seeing is more and more with the technical analysis, it ends up just being a little bit slower, and often causing people to suffer significant drawdowns. Now, if you're able to withstand it, oftentimes it resolves in the right direction. But it's like today, I told our members, it's like, look, you're about to have MACD buyers jumping into this because we saw on the daily chart that I put up that it had crossed over for a buy. All right, well, it crosses over for a buy after we've already had a 70-point move. A little late, but that's typically what happens. And so we'll get a little bit of selling into it because the early people like us will take our profits. It'll come back a little bit, and then we'll start adding back into that setup and going long. I mean, I wanted to see this type of correction because you got to remember, from my weekly charts, I gave 1454 on the ES as a target, and then secondarily we had 1474. I know that's way up there, but we satisfied our orange dots from our weekly chart, and then we move on to the next setup. So last couple minutes here, any requests, I'll go ahead and put them up, and then otherwise we'll call it a day, because I think it was a pretty good one from dot alert standpoint. I'll wait to hear anything. I'm going to go ahead and change my little ticker down there. Oh, I should have you write this out, Levy. You can write something on the ticker for everybody.
What's that?
Well, this is the little thing that scrolls along the bottom that they see on the bottom. There's green. See, I just put good day. It's so lame. That's why I need you.
Except you didn't click me over here.
Oh, I'm sorry. There you go. Oh, you erased my good day?
Yeah.
Okay. No, on the Apple, when it hits the target, what I really want to look for will be my power momentum shifting more towards a neutral. Oh, I have to click show to make that happen. There you go. Alright. Well, see, you have a much nicer way of putting things for everyone. I want to see a dot fractal before I'm a buyer on that 78-minute for Apple. Because I know from a daily standpoint we're just a fraction overbought. Reaching the danger zone right there. Looks good from a daily standpoint, but I'm a cheapskate. I like to get the best deal possible, so that's just the way it is. And in this particular case, we have Thursday options with this kind of downcline. You could begin to nibble very lightly at a call option setup here. Some people talk about doing the spreads and that. I'm just not a fan of it. I used to be when I didn't know the direction things were going. These days it's just not necessary. Now, for certain stocks that I don't want to sell for capital gains purposes and things like that, then utilizing the puts and creating the spreads, and then what I've done is I create riskless hedge setups, and at that point you can then just trade your weekly options against what you already hold, and that way you're never really selling your stock. So it just becomes option trades within there. Has very different tax implications. You can always talk to your tax accountant. For the options, no, I'm talking about next week for Apple, because I think that we're likely to see a move to the upside from it sooner rather than later. And this is where, that timing becomes significant, particularly if you're playing with options. But that's where you have to have these kind of indicators that give you more precision in those estimations for the moves. And you are looking at checkpoint today was the buy on that from the dip. So look at all those fractals in a row. We had the extreme fractal. Let me expand my chart up a little bit higher here. So we can see it. We had the extreme fractal, catfish long, orange dot. From 1709 to 1711 is the target. You ended up with your beautiful discount. So slide this over a fraction. High minus low, we were looking at around 70 cents there, so you were looking for at least a dime reduction. Well, actually 20 cents, so 1640. And 1641 was your low. You gotta love it when they're that precise to it. I mean, my goodness. Now it's interesting because you had a problem with the yellow here, but then look at the orange decided to move below to give you your confidence for an up spike there. Always good to see that take place. Alright, so that was fairly effective. I was glad we were able to go through some of those more complex setups, because they're significant. And, constantly checking where you're at in relation to your shakeout, either vis-a-vis the yellow line being below the blue. We can get into a little bit more complexity at another time on when I look for overbought and what overbought really looks like, particularly when it comes to your shakeout red and yellow lines here. Particularly when they're in an upswing and you've started to get lower shakeout readings and you've got your positive extremes, those become really strong short opportunities. I mean, just look at this one at checkpoint immediately. I don't even have to look at the price. You didn't even have to have the price on here, and I would have identified this spot right here as very attractive for short. Even though you had the orange above, at this particular point you had reached a maximum, and then now what you were likely to see maybe would be an attempt back up at the high, but the lower shakeouts were a giveaway on any attempt, and then when it broke down serious time, and then you had the yellow back above. So hopefully that helps. None of this is easy, but you just have to keep working at it, and it always helps when you have someone who's there to guide you through it. So let your friends know, and we'll get back and do another one of these perhaps on Friday. So take care, everyone, and I will talk to you on StockTwits.